Trading. Hope you are well. Today is 4th of April 2022. I'll be talking about some of the stocks that I believe could be doing really well in April and May, and why, after we had this massive run on lithium and EV sector. So let's have a look. Just want to remind you, this is not a financial advice, just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how to set up targets, stop losses, and how we actually analyze stocks based on its fundamental as well. Then we're matching with the BGS 20 strategy to make decisions. If you're obviously looking for financial advice, you're probably better off going to a proper financial advisor. This is, again, it's all to do with BGS 20 and BG Trading strategy, which is our proprietary strategy. Now, first of all, I just want to quick show you the group. If you haven't, if you're not member yet, that's free, right? Not buy, grow, sell strategy for share traders. It's Facebook community, and that you can see our results on this Facebook community, and we also share a lot of our analysis, a lot of our entries and exits, and why we think some sort of stocks could be good or could be bad. And then obviously we had the incredible result. I'm not bragging ourselves here. That what we're doing here is really encouraging people to actually use this strategy. If you're not using strategy, then I think this is the first biggest mistake when you're trading. So best thing, really use a strategy that works. Our strategy, you can see the results. We actually locked in about 39% profit on Arizona Lithium, which is a quite speculative stock still, but it still has a great prospect. And then obviously we also did another speculative trade on Ventura Minerals, which it's definitely a speculative stock, high risk, but we managed to quickly lock in the profit. So it's about $1,600 profit, 36%, which is great. That's a couple of days only. And then we share analysis here about electro-optic system, which I think could be a stock that will be doing well. I'm going to go through the charts a little later. Also, we did really well with Core Lithium, ARGOSY Minerals. The old stocks, they are we managed to lock really good profit already. They keep going up at the moment, but that's when things start becoming very, very dangerous, because now those stocks are in the FOMO area. I'm going to demonstrate in a second. And when I talk about a FOMO area, it's FOMO area according to BGS 20 KPIs. And then a lot of people ask, Les, do you guys don't take stop loss? Yeah, we do take stop loss sometimes. And then we did take one on brain chip. Although the stock has actually looks like still a little bit above our stop loss now, but we did take stop loss. We do so eventually. Part of the trading is to take stop losses, and it's extremely important that you have all this setup in place, not just to sell, but also not just to sell at the profit, but also to sell when the stock eventually falls on the stop loss. Let's now jump straight into the first. Let's take a look at lithium stocks, like Core Lithium, for example. This is obviously it is a stock that we spoke in the channel before, and is a stock that has been doing incredibly well. We bought the stock around this bullish intersection according to our strategy. That's why we bought the stock, and we sold around 70% profit. And then it keeps going up at the moment, and most likely will go up further. But the problem is, when you have the retracement, if you buy at the FOMO area, then you're exposed to a massive falls, despite the company has some good fundamentals. That is a stage where the buyers start going emotional. All right, I think for the long term, Core Lithium is still really, really good, but I wouldn't be buying now. I would just, if you holding, I would just hold. But if were be to buy again, I would be looking to buy around this sort of red line here, which for us is the simple moving average, which is currently sitting about $1. Could fall to $1. Could, of course, We've seen a lot of stocks falling quite a lot, but could not maybe keeps going up to $2-3. We don't, who knows? The truth is that we already made our profit in a couple of months, and then we're happy to move forwards to other stocks. Another good one was Argosy Mineral. Argosy Mineral is another a lithium microcap that will start producing, and but not as good, for my opinion. It's not as good as Coalition. First of all, because Coalition project is in Australia, where Argos Mineral is in Argentina, where they call the Lithium Triangle, and besides that, the Rincon project is not 100% owned by the company, where Core Lithium is 100% owned by the company. So we like to get more exposure when the project is owned by the company. Now, the truth is they could go more for sure, but it's getting a little bit dangerous on the EV space, as they already outperformed the market big time, and I believe they are prompt. They're prompt for a correction. Now, let's talk a little bit about some of tech stocks that I believe that could do well. Again, like the first one is obviously the blue chip tech stocks, Zero. And then if you are our VP member, you know that we already placed an entry on Zero. I believe the Zero will be, it's a great time to be looking at, just simply because we have at the moment the stock sitting around the SMA area. If you know BGS20, BG trading strategy, so why it's so important, because first of all, you buy the stock when you're avoiding FOMO. FOMO, again, is one of the most common mistakes among traders. I've done plenty of time at the beginning buying at the top, but then you get trapped because you buy the stock for too much money, like too high. So what happened is when the biggest challenge on trading is the fact that your emotions are actually playing against you. Where you think about buying is exactly the time that you should not be buying, because most likely it will be at the FOMO area. You start feeling that anxiety of seeing stocks going up and keep going up, and then you kind of feel that missing opportunity. Whereas you should be looking at stocks that are quite low like these, for the simple reason that first, again, FOMO, and secondly, you paying technically fair or cheap price. And most likely, like tech stocks, there are a lot of good stocks out there. The problem at the moment is that tech stocks are still haven't been sold. But I think stocks like this, you can easily take another make a 20% out of trade using strategy. So all we need to do is, if you buy around $100, you probably will be setting up a target around 125. And if you're looking at stocks to buy and make 50, 100%, you're probably in the wrong place, because that's when you get a risk, high risk involved, and you don't want to be in high risk involved unless you're putting very, very little money. But then you get into a stage that you nearly exceeding what you call investing, trading, and go to gambling, which is not what we're looking here. Now, Zero is one of promising opportunities, and you probably have seen all around the other channels as well. The Zero is being among stocks that are prompt to do well within the next few months. But now, not just because that, but the fundamentals of Zero is incredibly good. They keep opening new markets, and they have massive room to expand as accounting tool. Now, second stock that I want to talk about that I think is a good opportunity to buy, and is it? The buy now, pay later is still there. People using buy now, pay later a lot, as they never did. And obviously the market has punished this stock, because our fellow CEOs are always buying further, like moving with further acquisitions. And then every time they have to invest money buying other businesses to expand the market, they damage it EBITDA, and the margin becomes massively negative, which is what investors normally don't like. But the truth is, at the moment, we have the company is has just done another capital raising, and also it is it keep expanding. And honestly, now with this merge with Sezzle, it's becoming quite promising. Could be another leading player. Is already a leading player in the markets, in some markets, but could be could do really well. And I look to be honest, when everyone is scared about, that's what I want. That's what I like buying, and I think there's value at the moment, technically. Technical value and fundamental value as well, because again, like all the lithium stocks that people were making a lot of money, they don't even make money, they just lose money. People expecting them to make money, but they still losing money. So is Zip. And the products there, platform is a breakthrough, really nice platform, to be honest. For my opinion, again, I tell it's better than Afterpay platform. And then I'm pretty confident that those guys will eventually do well. The only thing in terms of technical, if you look at the KPIs, it's still a little bit tricky around $1.50. Obviously, we entered about this sort of level, but ideally, what we want to do, we want to see a better indication reversal. We haven't got a perfect indication reversal yet. It gets a little bit tricky. We could see a big fall towards to $1 still, but the market's trying to hold around $1.50, between $1.45, $1.55. Again, like 50-50, but over the long term, I see some very good, interesting value at Zip at the moment. Now let's jump to another stock, which is also a tech stock, EOS, which is Electric Optic Systems Holding. This is a stock that we just issued a analysis of this stock based on the BGS 20 KPIs. And I see some interesting value in this stock, and I could see also a potential reversal with the latest announcement of the company being hooked with the government. And also, this company, it does hold a very, very good technology, and which is military application, and will keep being used, and it looks like it's increasing with wars and stuff. So what we're seeing here is, from the technical perspective, we're using in the Heikenach, we see a bullish intersection, which is exactly where is exactly the confirmation that we wanted to have in order to buy. And then obviously the stock went up 65%, and now we are taking we didn't invest on that, to be honest, yet, but we're taking a dip now, which is a kind of a correction. But what I wanted to do is, ideally, the best idea to buy according to our strategy is, if the stock falls about 30%, we'll be in the buying area. The buying area for us, it would be around this sort of a square. If you can see here, this square, pink square area here, which is right at SMA levels. And that will also give us a lower high finally, which indicates that we call the pivot reversal, which normally indicates that the stock is confirming that will be reversing. So now, honestly, I think from the long term prospect, if anything under $2.50, it looks promising, because you would be already out of the short-term form area. But interesting enough, you still below the 250 days moving average. So this, in this case, Electric Optic System, if it falls around $2.50, it's definitely an area to consider. But again, you always, if you're gonna buy a stock, make sure you have your financial advisor consultant to make sure you're doing the right decision for you. Now let's go talk a little bit about iron ore. Iron ore is it's going up quite a lot. Together with our VIP members, we already invested on a Fortescue metal. Fortescue, it's always it's pretty much a blue chip, completely hooked to iron ore prices. But what I'm looking here is a potential reversal from this downturn. As you see, Okay, so that's always a bullish intersection. This is when you buy in a bullish intersection according to our strategy. That was 45% up. Okay, so you can make good money if you're buying a good quality company at the at the right price. So again, like the bullish intersection is buying at SMA, buying at the red line. So if you buy above the red line, what happens is you probably will be prompt for fall in the short term, and then it's psychologically not a good experience. Now, and now what we have here, another bullish intersection, right? So anything under $19.50, I think, according to this chart formation, it's very interesting to consider. And then, especially if oil prices are at the current levels or higher, 150 US dollars a ton or higher, Fortescue will most likely to do well. So what we're looking here is for 20% trades with those stocks. And obviously, I can see a potential upside for Fortescue to go potentially from this bullish intersection. We have obviously a target to sell under $24. That would give us another 20%. But we already entered. So again, 1250 would be the bottom line sort of entry, 1250 under, and always keep eye on iron ore prices. And that's a good diversification from EV stocks. If you look, EV stocks, there's some good EV stocks still. So if you go Magnus Energy Technologies, this is a company that is currently building its factory, battery factory in New York. It also has a graphite project, and it still struggle to go up. And I believe it's just about a time. It's just a matter of time for this stock to go a lot higher than it is at the moment. One of the reasons this stock hasn't been outperforming, has been underperforming, is we had some bad press and some allegation with directors, but honestly, they have already really compelling offtake agreements in place, and I don't think this company will fail. I think I'm very positive about this company. In fact, full disclosure, we hold positions on this. We're not trying to pump and dump. We just believe this according to our strategy. If you buy around under 50 cents, around under 50, under 50 cents and 46 cents, according to our strategy, you'll be paying a technically fair price for the stock that has a really, really high upside. Well, this is the stocks that I believe that could be doing well within the near term. EV stocks can keep doing well. Lithium stocks could keep doing well. Yes, it could. So if you're going to buy now EV stocks or lithium stocks, I would go, if you buy in the FOMO area, which I don't suggest to do it. Our strategy never buys in the FOMO area. Like you'd go for the stock that has more security, is already producing. So you look into either Pilbara Minerals or Oken Limited, which they are already lithium producers. So Oken Limited at the moment is trading 24% above the SMA. It is FOMO area, guys. It is FOMO area. But, if you haven't bought it yet, we have what we call a potential breakout as we speak. This breakout here that happened on Friday. And then we could see now, Oken going all the way to $14. That's what we're expecting, right? Anytime there's a technical analysis, there's a strategy that says that anytime you have a breakout, that's time to buy in. And this breakout has a very strong volume to the upside. However, for the short term, I'm always said, avoid buying at the FOMO area. Avoid buying the FOMO area because you save yourself a very, very high emotional distress. That's why you want to do it. You want to feel good So buy cheaply. Okay, it's just a matter of time of all these stocks to have a correction. So patience, not just to wait the stock to reach the target, but also patience to wait to buy the stock at the right buying time is critical. So that's why I use this strategy, guys. So if you want to learn a little bit more about using our strategy, we have an online course for exclusive for learning BG trading and BGS20 KPIs. And I can assure you that will save you already a lot of money by only applying the strategy to avoid the silly mistakes. Okay, guys, that was my video for this week. It's quite a long video. Hopefully you guys enjoy. Thanks for watching till the end, and I'll see you in the next video. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.